released. Now, on to Anax Metals. They've released their DFS for the Whim Creek copper operation, 8-year mine life, debt funding from Anglo America, subject to DD of the DFS at this stage. It's $20 million US. Now, developed, they've got a 20% free carried interest up to a decision to mine. They're trading flat today. Now, JD, on to you for your first bit of analysis, mate. Are we going to see a few more junior copper plays like this coming to the forefront in Australia? What's your thoughts, mate?
Yeah, so that's it, Matty. People have been looking pretty hard across Australia for the next copper asset. We've seen a lot of action in Queensland with 29 Metals, AIC. Now this up in the Pilbara is a new exciting play. So 70 million CapEx with Anglo American after doing their DD to tip in about 30 million. On our numbers means they need another 26 million and capped at 30 million bucks. It looks like the market's a bit unsure at the moment whether they'll get that final equity raise or debt funding.
So that 26 is based on Develop's 20% free carry. That's going to account for 14 of the.
That's right.
14 of the capex.
Develop's free carry takes them up to final investment decision, which means they'll need to tip in roughly 14 million bucks of the 70, and that leaves that shortfall to be covered by ANX, whether that be through equity or debt at a later stage.
So how's that looking? So you've got Anglo American are obviously in to secure the offtake for the copper. Is there potential they could tip a bit more in than the 20 million US?
That's right. There's potential for that. They've taken the offtake. They're looking to get the zinc and copper production. They've also taken a royalty from the asset, and there is potential that if they can increase that, it would give the market a bit more confidence that ANX can go and fund the rest, whether that be through equity or additional debt.
Do you think there's a bit of a risk with the 70 million capex in this current inflationary environment? We see a lot of capital blowouts. Is there a risk that 70 million might not be 70 million after actual construction?
Yeah, there's potential. They have obviously included some contingency costs in that, and it'll be interesting to see how that plays out in future with Develop being tied into this asset.
Yep, very good, mate.
I think the one that stuck out to me on that one is that Anglo's commitment was subject to the DFS, and they've sort of come out with the DFS on announcement. I would have thought part of the release of that DFS would have been providing Anglo with a draft, and the optimal way to release this DFS would have been to say that that subject, the clause that sort of it's been waived by Anglo and they're supportive for the debt. Potentially subject to an equity contribution or whatnot, but they haven't come out and said that. So I think there's still a bit to play out in terms of how likely is Anglo's contribution, and we'll see how that pans out in future announcements.
Absolutely.
Heavily leveraged on the copper price going. I know that everyone's talked about this copper price going to these new highs. It hasn't yet. It's still only sitting just above $4 a tonne, but I'd assume if that got up to $4 a pound US, I assume if that got up to $6, the projects like this would be attracting a lot more capital a lot quicker.
Yeah, that's right. Lads. And you can see in the assumptions in the DFS that they've forecasted copper prices by 2028 reaching just under $10,000 US a tonne.
Yeah.